Welcome back. Well, for today, it seemed as though it was a bit of a better session for the mid-cap index. It ended with a gain of around 0.5%. We had the Bank Nifty, which was absolutely flat, and the Nifty, which did go sub 9,300, but managed to recover and just close above that level. It was spotted with a lot of earning reactions today. So we had something from the frontliners in terms of the Nifty stocks. We had Ambuja Cement from the broader markets. We had JSW Energy, which was down around 7% just to give you a sense in terms of a couple of decliners, and something like a DCM Shriram, which was up around 5.7%, reacting to what was a good set of numbers. The other set which was in focus were all the auto stocks, really reacting to their April sales figures. We still have Basant Maheshwari with us. So Basant, I'm going to ask that question to you then. In terms of the auto space, anything that you like? Maruti is now above 6,000 and just going strong. Besides that, anything?
No, nothing. I mean, Maruti is like the private bank space where you don't need an analyst, you don't need a fund manager, you don't need a TV anchor to tell you what to do. You just go and buy it, and you say after 10 years, I think it should be 5-7 times of what it is right now. So it's a stock which doesn't need too much analysis. So I think apart from Maruti, Eicher Motor, I mean, one thing which investors have to do, it's not about buying Maruti at 6,000. It's about holding it. So how do you find whether 6,000 is the top or not? If I can just share this with you. It's not specific to Maruti, I'm just giving you an example. So if the Nifty trades at 9,300 for 2, 3, 4, 5 days, then in 90 cases out of 100 it would not be a top, because tops are made in a matter of minutes. So if a Nifty goes to say 10,000 and then drops the next day to say 9,800 and then to 9,500 and doesn't stay at 10,000 even for 1 day or 2 days, you are sure this is a top. So even for individual stocks, if investors are holding a Maruti, for example, or any stock from lower down levels, all they have to do, like what I do normally, is I just see whether my stock is holding on to the all-time high price for at least 1, 2, 3 days. Because if it was an all-time high top for several years, because the biggest fear in a bull market is you don't want to get stuck in a stock which is made an all-time high and doesn't reach that space for the next several years. So if a stock has made an all-time high and it's trading near about there, just hold on to it. Because bottoms take months to make, but tops are made in a matter of minutes, and then the money just evaporates. So I think it's important to hold on to what you have and to play the entire rally, then try and make the 5% and the 7% and the 10%. So
Basant, I know you mentioned that you're already fully invested, but let's say that, if you don't have fresh money coming in, hypothetically, totally hypothetical, if I give you money today, would you keep some of it in cash? Would you invest it primarily in large caps or small caps? Give us a couple of names. Would you go with your existing stock bets, or are there new themes that you try and find?
So yeah, there are new stocks that come in. So most of our clients, when they come with new money, we try and put the new money to the new stocks, because there's no shortage of ideas. But one thing that we have done for the last 25 years personally, I've done is I've never been in cash. So whether it was 2008, so I prefer waking up at 4 o'clock in the morning and then looking at the Nikkei and praying to God ki Bhagwan bacha lo, rather than going in cash. And unless your investments are keeping you awake at least 3, 4, 5 times in a year, you are not adequately invested. And to make enough money in the market, you have to be adequately invested. So we remain fully invested. Another part which you have to understand is there are no shortage of ideas, but it's better to get it wrong on the basis of quality than on the basis of valuations. So this thing which we do normally is we buy the top-notch stock in any of the sectors, and then even if it's a little expensive, we say, okay, for the next 6 months, for the next 9 months, the earnings might take a little while to catch up, but then it's better to hold on to a real solid stock for the next 2, 3, 4 years, and then rather than try to find the next, the cheaper alternative. So obviously, if the time is to, if you're coming into the market, just remain invested, buy good quality stocks, but the allocations might vary depending on the current price. But more or less, it's better to remain invested than try and find the cash component and put it to use, indicating a market bottom whenever it comes.
Okay, all right, Basant. Well, it's always a pleasure listening to you. Thank you very much for joining in this evening and talking to us on our show. Well, we now have Ashwani Gujral with us to talk about the technicals of the markets. We're hopping from fundamentals to technicals. Ashwani, so what did you make of the markets and your sense?
See, index is sideways because, half the index is going down, the other half is going up. But clearly, chances are we will hit fresh highs at some point during the month. And if you identify the right spaces like housing finance or tires or any of those spaces, then it's possible to make money. But broadly the range remains 92.50. As long as that holds on, you just keep buying all dips. And similarly on the bank nifty, as long as 22,200 holds on, just keep buying the dips, and finally the market, even on an intraday basis, tends to reward you. So just sideways action, maybe again for the next couple of days, but individual stocks, as we saw today, could do fairly well. Calls for tomorrow could be basically, you look at Soba developers. Out there we are looking for targets about 400. Escorts has been sideways for a long time, broke out today and held on to that level. So chances are you could see 600, maybe not tomorrow, but next few days. And RBL Bank, which is again breaking out of a sideways move, we could see levels of 640 here, again next few days. But overall, these are the specific sectors that you have to be in. If you want a space that is still, just starting out and has ways to go, it's real estate. Yes, stocks have gone up 100%, but why can't they go up 500%? So it's at that phase of its, life cycle where things got to 5% of their peak valuations, and even if they come back, say 500%, they would still be 30% of the peak valuation. So that's the way to look at real estate stocks and stay invested in them.
One more pocket where there was a news flow today, Ashwani, and I'm talking about autos, and actually it was a bit of an outlier sector. Stocks did quite okay given the rest of lackluster trade. Any calls there, Maruti or two-wheelers, anything that you like?
See, there are certain stocks within autos that continue to do well. Eicher, Maruti, you keep holding them, but they may not move like they have moved so far, because autos is generally in the first phase of a bull market when rates etc. start coming down. Autos is the first phase of the market. Generally it's a cyclical, but in this country there's a lack of everything. So autos continues to perform throughout the bull market, but maybe not at 6,700. It tends to correct 400-500 points, for some reason, bad auto numbers or flat auto numbers. That is a time to get into stocks. The only problem with getting in now is that your stop is 500 points lower. Otherwise, I think Maruti has still ways to go, and this is one of the leaders of the market, and the market cap pretty much shows that.
Okay, all right, fair enough, Ashwani. We're going to let you go on that note. Thanks very much for joining in this evening.